So we are going live. Hopefully this works out. It looks like we're live. I'll come back to you later. So we are live. Okay, let's hop right in. Thank you all for joining me for today. For anyone here, these are your Bitcoin and cryptocurrency news updates and such for the day. So starting off, let's jump right in. We have 2,348,000 Bitcoin left to be mined. 900 new Bitcoin are being mined every day. This number is Bitcoin that is left to be added to circulation. It's not necessarily new Bitcoin that are already, it's not necessarily new Bitcoin that are just being created out of nothing. They are part of that 21 million max supply of Bitcoin. And then you have your 18,651,000 Bitcoin that are currently in circulation, or total Bitcoin in existence. Over on CoinGecko, we do have Bitcoin's current price is $58,000, up 3% on the day, 14% on the week. So those returns are pretty good compared to stocks and other normal investments. For our Bitcoin market dominance, as a reminder, we do keep a look at this. We are at 62%. When this number falls, and you can kind of see it down here, when this number goes down, the money is typically flowing from Bitcoin into other cryptocurrencies such as Ethereum or other large caps like Cardano or Polkadot right now. And so we want to keep an eye on that because that means the money is flowing that way. So if you are aware of this, you can kind of front run it and then benefit from some of those gains. And then when the Bitcoin market dominance goes up, money is flowing back into Bitcoin from those smaller coins or out into fiat dollars. So on Bitcoin treasuries over here, we do have the current value of the Bitcoin stored in the treasuries of publicly traded companies is $78,958,000,000, or 1,365,000 Bitcoin, which is about 6.5% of the total Bitcoin supply. So not too much change here. It is interesting to note that publicly traded companies currently own 6.5% of the total Bitcoin supply, and we will come back and talk about this later when we get to the news section of our reports for the day. Over on Cycle Repeat, Bitcoin's after having top right now is predicted to be 734,000, which as always is quite a bit above our predictions. They do use previous cycles to kind of predict where Bitcoin's peak is going to be in the relative short term. The only issue is that when they do this, they typically don't take into account, at least I've noticed they don't take into account that the cycles tend to peak lower than previous cycles. So originally when you had a Bitcoin cycle, you would have like 10,000x gains, and then the next cycle you only had like 5,000x gains, and then the next one it was 1,000x, and then it was 100x, that kind of thing. So those numbers have been decreasing over time. Over on the stock to flow model, we're going to zoom in here, and we do see that the fair value of Bitcoin as of today, March 11th, is currently $51,119. And by the end of this bull run, once the halving event has been taken into account, we're looking at a fair value of around $82,000 to $83,000 per Bitcoin. Over on the other charts we have, unrealized profit loss, we are currently at 72%. It's climbing quite a bit faster than we'd like to see. Keep in mind, the reason we look at this chart is that once Bitcoin's unrealized profit loss hits around 75%, historically that has been the end of a bull run. So we do want to keep that in mind because that could be a warning sign and a warning indicator. And I actually am seeing a question in here, so let me just scroll up, make sure there weren't any more. Explain the details of a halving, please. Okay, so a Bitcoin halving event, let's go back to that one. Bitcoin halving event is when the block rewards for the cryptocurrency are cut in half. So what that means is when a miner is mining Bitcoin right now, you have currently you get 6.25 Bitcoin per block that you contribute to the system. And when that number decreases, it means there's less money coming into the supply. So what do I mean by that? Basically, every 4 years or so, it's like 3 years and 9 months, I believe is the actual number, but about every 4 years, when a miner contributes a new block to the system, the number of Bitcoin as a reward that they receive gets cut in half. So in the early days, and you can kind of see that here, in the early days, you had 50 Bitcoin for every block you contributed, which happened once every 10 minutes or so. So every 10 minutes, 50 Bitcoin were added to the system. Then, after about 4 years, the first halving event occurred, in which that block reward size went from 50 Bitcoin to 25 Bitcoin. It was cut in half, and that's why we call it the halving event. So it was cut in half, and so now instead of every 10 minutes you get 25 Bitcoin, or the miners get 25 Bitcoin per block, it's instead of 50, it is now 25. And so that decreases the amount of Bitcoin coming into the currency supply. So Bitcoin is necessarily then a deflationary asset as less and less Bitcoin is added to the system. And you kind of see this on this chart where the Bitcoin issuance is really high early on. It's like 50 Bitcoin per block. And then as time goes on, it becomes less and less and less. And as time goes on, increasingly more, it'll become even less than 1 Bitcoin that is added to the system. And so when this happens, it's like a supply shock, because if everything else is equal, all things staying normal, when the supply, the incoming supply to anything, and if you're thinking general economics, decreases, then the price will go up, because there's less supply coming into the system, so less that can be bought up. And when that happens, the price will increase. And so that historically has caused these massive Bitcoin spikes. As we can see over here on the stock to flow model, you have Bitcoin's price jumping up huge amounts after a halving event and falling back down. And then you have another halving event, and then Bitcoin's price jumps up a huge amount and then kind of falls back down. And then we are now in another halving event, and so Bitcoin's price is just going to keep going up until it's kind of compensated for that. I hope that explains the halving. So that's why we keep an eye on the after halving top and the halving events for Bitcoin, because they kind of front run the Bitcoin cycle. So if you were aware of this earlier on, the last halving event happened May of last year, and this is when I started talking about Bitcoin a lot, and the price was around 9,000. So we didn't know at the time how high it would go, but if you are aware of these cycles and things, you can know that the price is going to increase. So regardless of what it is then, which is 9,000 dollars per Bitcoin at the time, we just knew that the price was going to go up. You don't know exactly how much, and that's what cycle repeat tries to predict. Based on previous cycles, they predicted that it would go up, let's see, it was around here, $9,000 or so at the last halving event. So that you don't know how much it's going to go up, but cycle repeat tries to predict, okay, we think that by the end of this cycle, it's going to be $730,000 per Bitcoin, which again, I think is kind of a stretch. But yeah, so you want to keep that in mind so that you have an idea about that. Which chart do you feel is the best indicator, and why? The best indicator for Bitcoin, I am more of a long-term believer in Bitcoin. And so for me, I do like the stock to flow model, just because it'll show you generally what a fair value of Bitcoin will be, assuming the current economic models hold and the incoming supply is about is related to the demand pretty equally to what it is. And so basically that just means that, like, it'll show you what a fair value of Bitcoin probably will be at some time in the future based on the supply they have and the demand. And so here you can see by the next halving event, at the end of the next halving event, the fair value of Bitcoin will be around $1 million. And since I'm not really one to like actively trade, I do think that holding long term is a better better bet for most people. And so it helps to see about where you could expect it to be. And if you're holding long term, then selling Bitcoin or buying at some 5 to 10% price swing now is not as relevant if you're looking on like a 10-year time horizon. And that's because, like, for me, if I'd invested $100 in Bitcoin a decade before I started investing in Bitcoin, I'd have hundreds of millions of dollars. And so I'm not counting on it doing the same thing over the next decade, but I am of the belief that it will do something similar, that it will appreciate in price a significant amount. So I do like this chart the best for that, if it's just one chart. Okay, glad you got that. I'm glad that explanation was helpful. Thoughts on Matic? I'll talk about Matic again at the end, so stick around for that. And other altcoins. So what happens after the halving that drives? So whenever a halving event happens, basically there's just less supply coming in, and everyone kind of knows that that means the price is going to go up. So partially it could be that there is less Bitcoin and there is more demand, and so Bitcoin's price necessarily goes up because everyone wants to buy Bitcoin, but there's not as much left. And then that could also partially be everyone believes the price of Bitcoin will increase significantly after a halving event, and so that could also be pushing up the price. And that's called a self-fulfilling prophecy. You could probably look up more on that online. I haven't studied those in too much detail, but it's basically if everyone thinks something is going to happen and takes action assuming that thing is going to happen, then that thing may as well have happened because of the action of every individual. Bitcoin cycles are typically 4 years or so. Bull runs are about 12 to 18 months. So this bull run is predicted to end by the end of the 2021 calendar year. So keep that in mind. You probably want to exit before then. And after that, we'll probably have a year or two of a massive correction, like 60%-ish, maybe more, maybe less. And then we'll probably see some consolidation, kind of like we saw at the last halving event. As you can see here, Bitcoin peaked at like 20,000, just under 20,000, and then that was in December of 17, and by December of 18 it had fallen to its lowest point, which was then 3,000 or so, and then we had a rebound up to about 10, and then consolidation before the next halving event, and then we have now our bull run all over again. So we'll probably have about a year after the peak, and then about a year of consolidating, a year or so, and then bull run all over again. I think that was all the questions we had right now. Yeah, flow is more or less demand in this case for the stock to flow model. And if you go to the links in my bio, you'll actually be able to find links to these. And for the Look into Bitcoin website, you can actually go to the website yourself, and it has these really useful explanations of what the indicator is, how it's made, why it's used, what it's useful for, all that kind of stuff. So I definitely recommend that. So let's just actually wrap up here really quick. For our bid-ask spread, this is how many people are interested in buying Bitcoin as opposed to people interested in selling it. We do still see a huge amount of buy interest at this 43,000 level. So if Bitcoin does start to drop in price significantly, I don't think we'll go much below that, at least not right now, just because there is this huge spike in interest of people wanting to buy it at that level. And in terms of increase in price, we do see a lot of people interested in selling Bitcoin around the current levels up to 60,000. So we may hit a bit of a wall there as Bitcoin's price starts to climb. And then in terms of bullishness, we do currently have 72% unrealized profit loss, which is less than the 75% that typically indicates a peak to a bull market. So we are looking good here, getting a little bit close though. And then on the Pi cycle top indicator, just a reminder, when the green and orange lines cross, that has historically, within 3 days accuracy, predicted the peak of a bull market, and we are not yet crossing. So this is also bullish and a good sign. So our last bit of news that I wanted to comment on was a Norwegian oil billionaire says Bitcoin could be worth millions of dollars each, puts liquid company assets in Bitcoin. So Aker, which is a Norwegian oil company, is putting its money into Bitcoin. And this is really interesting because a lot of companies and groups are looking at Bitcoin more as an investment rather than what its original purpose was, which was a peer-to-peer transactor of value. And I've actually gotten this question a few times that basically right now, because of how Bitcoin is so uncorrelated to stocks and pretty much everything else you can invest in, everyone is investing in it because it's an uncorrelated asset as opposed to using it as a for transactions as a transactor platform. So yeah, so there's that. Let's now get on to the questions. I had one on Matic. Matic renamed Polygon recently. I think is a really good project. They've kind of shifted a few times, and I think that shows that the team is really dedicated and committed to succeeding, whereas some projects get roadblocks and that just kind of stops them cold. Matic could do very well. I personally don't have very much Matic. I kind of wish I bought more earlier on. It tends not to do very much for times, and then it explodes very quickly, in a very short period of time. So keep that in mind. Definitely do your own research on it. I'm working on a report on that, so keep an eye out on my Medium page, and I'll try to post a video about that on TikTok and YouTube as well once I'm done. Make sure you always do your own research, though. Never invest money you're not willing and able to lose. Matic, that being said, does have a much smaller market cap than Bitcoin. And so if we're looking at it from that perspective, it does have a lot more room to grow. Yeah, Matic, now renamed Polygon, does have a lot more room to grow. It's got about a $2 billion market cap compared to Bitcoin, which I think is up to like $1 trillion. So it's good in that sense. Additionally, Matic is a lot more like Ethereum. It has a lot more utility. And Ethereum's current market cap is, what is that, $2 billion? So if Matic were to like replace Ethereum, which I don't think is realistic, but it could become sort of close, a replacement would be 100x its current price, and a supplement, I guess, would probably be about 10% of Ethereum, which now is 200 billion. Matic was 2 billion, so that would be about 20 billion. So Matic could have about a 10x upside if it did get to that level of adoption. So that's one way to do it. And then if you want to learn more about Matic or do more research on it on your own, really neat feature of CoinGecko, if it lets me load Matic again, is you go to the crypto you want. Okay, there we go. And then you look down here on the community section, and it's got their Reddit, their Twitter, their Telegram, and then Open Cacao. I'm not really familiar with that one, but Reddit, Twitter, and Telegram, definitely go check them out on there, and you can get more information from the people involved in the project and get an idea of the community there. So after the halving, once a halving event happens, and so the question was, so what happens after the halving that drives the price back down? Basically, what we've observed in the past, historically speaking, when you have a Bitcoin halving event, the price starts going up, and then a lot of people hop on the boat and push the price up higher than it maybe should be. So we saw this, let's go back to 2017. We saw this, the halving happened in 2016, July of 2016, when Bitcoin's price was around $500 per coin. And the excitement of Bitcoin's rapid increase up to its about fair value of $5,000 in September continued to push up the price all the way up to $20,000, which is about, what is that, 4 times higher than the 5,000 fair value. So Bitcoin's price was pushed up by a bunch of eager speculators to 4 times higher than at least what the stock to flow fair value was estimating. And so then at that point, basically it's overvalued, and when something is overvalued, people are going to start selling it, and so that pushes the price back down. And then at some point you have again an overcorrection down to the bottom, under the fair value, and then people will start buying back in. And then when you have the next halving event, which we are in right now, or which we are feeling the effects of right now, the price does the whole thing all over again. So Bitcoin for the next dip, what are your predictions for how low Bitcoin will go in the next dip? My predictions are, and I think I've made a YouTube video about this in detail, so you can check it out on there if you want more. But basically what we've seen before is that the price drops usually no more than 50% of the fair value after the halving event peak. So in this case, the halving event, once taken into consideration, the fair value is going to be around 80 to, I believe it's like 90 or $100,000. So splitting the difference between that, it's about $85,000, $90,000. I don't think anything less than half of that is, we'd see Bitcoin at that level again. So after the halving event, after the massive pullback, I think a reasonable level to start, if you see Bitcoin at around I think 60K is what I did. Between 40 and 60K was the most likely bottom, assuming the similar cycles persist. So if after we peak out, and again, my predictions for the current bull run are anywhere between $100,000 and $400,000 for a Bitcoin peak. And most of that movement is going to happen in the last couple of weeks, because the nature of parabolas, as we saw in the 2017 run, you had Bitcoin at 5,000 in October, and then by November it was already 10,000, and then by December it was already 20,000. So you basically did 2x increases in a row in a matter of a month each, as opposed to the August to October of the next year. So as opposed to the 14-month period of increase. So the parabola gets biggest just before the end. So I do think that once we do peak out and then fall, probably no lower than $40,000 to $60,000 at the bottom for the next dip. Flow in the stock to flow model, flow is generally the demand, stock is the the incoming stock. Price go up for Bitcoin, yeah, it has been recently. So everyone wants, and price is steady but supply is lower, so people try to accumulate faster and cause, I believe you meant, yeah. So when the price, when the incoming Bitcoin, the incoming flow of Bitcoin decreases, everything else staying the same, people still want to buy it at the same amount, it would necessarily increase, because if there's 10 Bitcoin every week and there's 10 people who want to buy 1 Bitcoin each, if all of a sudden it's 5 Bitcoin coming in every week, those 10 people still want to buy Bitcoin, so the price is going to go up for those 10 people, because there's half as many Bitcoin available. So is it smart to sell at the end of the year or just hold for the long term? Also a long-term hodler, good for you. Yeah. You should always do your own research and make your own decisions. Personally, I think I'm going to be selling some. You never want to try to time the peak, because you're pretty much always going to be wrong. So if you think about it statistically, everyone that's in Bitcoin, there's only going to be one person that actually sells at the peak. So what you want to do is, once Bitcoin reaches your target price, you want to start dollar cost averaging out, where you sell 10% of your Bitcoin every week, say, if you think the peak is going to last for about a month, and you want to sell out 40% of your Bitcoin. And so for me, I'm probably going to sell a little bit, just to recoup my initial investment, and then let the rest ride, and just hold long term. Again, because Bitcoin, I'm a long term believer in. Okay, I think I got to all the questions. Glad I got all your questions done. Thank you all so much for the questions. We got to talk about Polygon, Matic, up to 2 billion market cap, which is great for them, up a huge amount, well, 2,000% on the year. So definitely a good investment. Was definitely a good investment. You should always do your own research about where they're going in the future. We do see big oil getting into Bitcoin. So that's something to keep in mind, that even these major private companies are investing. And I believe that was the last thing I wanted to talk about. When we talked about the Bitcoin treasuries and how much Bitcoin is stored in the treasuries of publicly traded companies, which is currently about 6.5% of the total supply, this is just public knowledge. So for a company like this, Acre, this is a private company, and so when they're investing in Bitcoin, they don't necessarily... Actually, I don't believe it was this one. I believe it was a different one. Acre I haven't done the research on, but there was a real estate company. Here it is, American Home Warranty. So American Home Warranty is also buying Bitcoin and accepting crypto payments, but they are not a publicly traded company. And so the thing to note with this is that the amount of Bitcoin that is owned by companies isn't necessarily this 6.5%. This is just publicly traded companies that have to disclose that information for their shareholders. For a company like this, they actually don't have to disclose that information. So there could be a lot more corporate adoption of Bitcoin that we just don't know about. And because we are seeing a lot of smart money getting in, and we were seeing a lot more smart money getting in around the 10 to 20K Bitcoin level last fall, you want to keep that in mind, that smart money is going to get in. They're going to start advertising online that you should buy Bitcoin, and they're going to start talking about it positively in the media, and then everyone's going to hype it up so that us start investing, and then potentially they might dump it and leave you holding the bag. So do keep that in mind, and it's just another reminder and reason to never invest more than you are willing and able to lose, because there could be a significant amount of these private companies that don't have to disclose their financials to the public that are buying Bitcoin. So instead of that 6.5% of Bitcoin owned by publicly traded companies, it could be more like, I don't know, 10% of the Bitcoin supply is owned by corporations. So do keep that in mind. And then one last check of questions. Oh, we got a few on here. The altcoins. So I like investing in cryptocurrencies or projects that allow that are or stocks even that are well diversified, because it means less work for me, right? If you invest in several companies, you're kind of actively managing your funds. But if you are able to invest in like a basket of stocks using something like an ETF, you have a much more secure investment, because if one company goes under, you don't necessarily lose everything. And there are not very many crypto ETFs, unfortunately. The one that I personally, and I do want to disclose that I personally think is a good one is DeFi Pulse Index, just because this was the top choice when I was looking for cryptocurrency indices. And they trade on Uniswap, if you're familiar with that. I also think you have Hotbit here and Bilax. They are an Ethereum, they're an ERC20 token, so they're on the Ethereum network. And they have a bunch of cryptos, including Uniswap and Axie and Aave. So I do think that is a good thing, because it's more diversified and you don't have to do as much active research on that. Seller. I am not familiar with Seller, the crypto. Let's check that one out. Seller network. So it's about mid cap. So one thing I do note just right off the bat is the circulating supply is currently 3.9 billion, and the maximum supply is 10 billion. So there's not even half of the total amount of cryptocurrency that can be in circulation is currently in circulation. So if that is like on a vesting schedule and it's allocated to the team, the founding team, that could be a red flag because they have the potential to dump those cryptos. Another thing, a study was done that basically showed that when a cryptocurrency has all of the supply immediately available, or it's more or less equitably distributed, like Bitcoin, where everyone supposedly has an equal opportunity to get access to it, those cryptos always tend to perform better. So I need to do more research on here. Their 1 year gains are phenomenal, basically just going parabolic. So that's cool. But that's kind of what I would look at just right off the bat. They do have several communities here, so I might go on and check how active the community is, just checking that kind of stuff. So I hope that helped a little bit. Do you see miners' effective Ethereum prices on updates? Yeah. So wrapping up here, last question: do you see miners' effect of Ethereum price on update? So the miners, for those of you unfamiliar, Ethereum is going to be going through some changes. EIP 1559 is the current update to Ethereum that is coming out shortly. And by shortly, I think it's July of this year. And what that is going to do basically is make Ethereum a deflationary asset. So when Ethereum gas fees are taken, instead of them all going to the miners, those fees are going to be burned. And so that takes Ethereum out of circulation. The thing is that the miners don't really like this because it means they'll get less money. But the miners for Ethereum are also being phased out. With EIP 1559, it's part of the rollout of Ethereum 2.0, which is meant to switch Ethereum from a proof of work, which rewards miners for contributing to the cryptocurrency, to a proof of stake concept, which essentially rewards people that stake their Ethereum. And staking is basically like putting it in a high yield savings account or a bond in traditional finance. And that basically means you give them your Ethereum and then you get rewarded with the fees collected from the network proportional to the amount you put in. So if there's 100 people, everyone puts in one Ethereum, everyone stakes one Ethereum, and you're one of those people, then every time an Ethereum transaction happens, you would get 1% of those fees because you put 1% into the network. So that's the basic idea of it. And so Ethereum is switching to that model, and that will make Ethereum mining obsolete because it won't happen anymore. It'll still happen for the old system like Ethereum Classic, but not for modern ETH. So I think that may increase the price of Ethereum quite a bit, just because Ethereum right now is an unlimited supply, unlimited cap cryptocurrency, and while it has a limited inflation, so it's only going to go up a certain amount, it could potentially, all else staying the same, go to infinity, similar to national fiat currencies. And so that's something where if you buy one ETH now, you own, say one. I think Ethereum's current cap or soft cap is around 125 million. So if you had say 12.5 million ETH, you would have 10% of the total Ethereum supply. But like a million years from now, that number could be like a billion ETH, and so your exact same 12.5 million ETH would be way less of a percentage than what it previously was. And so basically what I'm trying to say here is that when Ethereum switches to a deflationary model, just by holding an Ethereum, the price will go up because there will be less Ethereum in the system like a year from now or 2 years from now. And so that necessarily will most likely increase the price. Just basic supply and demand. Hope that helps. Hope that, okay, that looks like the last question. Hope that helps. Hope that that you learned something, that you got some value from this. If you're watching here on YouTube and you got some value, I'd really appreciate a thumbs up. If you want to continue receiving updates and stuff, make sure to subscribe and hit the bell button and then select notifications and all so that you're notified whenever I post. That's basically it for today, so thank you all so much for watching. I am going to stop the stream now. Take care, stay safe, only ever invest what you are willing and able to lose. Make sure you're always doing your own research, making your own decisions for your personal situation. And yeah,